energy from hydrogen.
So who are we?
Believe it or not, ExxonMobil. And these solutions can help businesses like yours.
Or yours.
Or yours.
Heavy industry with low emissions. Let's deliver.
Way above the inflation rate, and the big unions are looking for something close to 7%, which again is way above the right level. So all of it is going in the right direction. It's certainly going to put pressure on Japanese bonds. That's the most obvious place because they would directly respond to anything that the Bank of Japan does. There is also a 20-year bond auction tomorrow, which will be pretty tricky to get off the ground considering the environment. And then you would expect the yen probably will gain some ground as well. The big decision, obviously, for the Bank of Japan is whether to do everything in one shot or to try and spread it out over a couple of meetings. The tricky part for them is that the March 31st fiscal year end comes in between their March meeting and their April meeting. They may prefer to do it in steps, something like remove yield curve control first, see how the market responds, and then come with the exit from negative rates a bit further down the track. There are people who are suggesting they'll just do the whole thing all in one shot and let the market deal with it. But that, considering the kind of language that we've seen from Governor Ueda, he seems more like a cautious chap who probably wants to do it step by step. So it looks very much as though we're going to get something at the March meeting, but maybe not all of the changes that the Bank of Japan has in mind.
Yeah, what levels are you watching for dollar yen right now? I mean, we're at 146, 147. Are we really getting close to 140? And can we actually stay at those levels?
I think if we get a March decision, if there's a change from the BOJ next week, there is definitely room for dollar yen on the downside, because it clearly, a lot of traders have been thinking that they wouldn't be brave enough to make a change before the fiscal year end. So it's not fully priced into the market. There is still a lot of positioning. We see the weekly data from the United States, which shows net short positions on the yen are still pretty large. They've been reduced slightly, but they're still, by any means, they're large numbers. So people haven't given up on the carry trade in the yen. They think they've got a bit more time. So a March decision would certainly be a shock to some people, and there would definitely be room for the yen to appreciate. Maybe towards the low 140s is a reasonable target zone for that. But definitely it is not fully priced in, and there will be room for traders to move. Plus, of course, you've got the cross rates coming into play as well. There's plenty of other positions against the Aussie, the euro, the pound. They all need to be unwound as well.
And it really depends on what happens with the Fed, too, what dollar yen does, I'm guessing, Mark. And with the CPI print, interesting to see this sort of reaction in equity markets. First, it was like a small dip for a few minutes, and then we quickly just rebounded at about 1% on the S&P to hit another all-time high. Seems like the market is really still continues to ignore sort of the Fed discussion in some ways. Can that continue?
Well, as far as the equity markets, especially in the United States, are concerned, I think you have to look at what's driving them, what's their main reason for the kind of moves that we've seen recently. Well, so much of it is the AI narrative. And if you're an investor who's mostly thinking that that is going to drive markets over the next few months, interest rates in the United States don't matter. It doesn't matter whether the Fed is at 5%, whether they reduce by 25 basis points in 2 months, 3 months, 4. It's irrelevant to the decision about whether you get involved in the AI narrative. It's almost immune. The demand for those related products, we've seen the earnings from Oracle last night, tremendous. Nvidia is heading back towards its all-time highs as well. Clearly, there's a lot of traction in that story. And whether the Fed changes the dot plots next week or waits a bit longer, it really doesn't matter to people who are focused on the tech sector. It's almost immune to the whole Fed discussion.
Does that apply to the HS Tech and what we're seeing in this bull market too, Mark?
I think that's what you're beginning to see, people making that kind of decision here in Asia as well. They're looking at the Chinese tech companies and they're saying that some of that silver dust is going to float down their way as well. Of course, there are some considerations. The United States has put sanctions on certain Chinese companies. There may be more in the pipeline. But even so, people like Tencent, Alibaba, JD.com, they've shown that they can get around some of that. They can still make decent earnings. people are optimistic that Tencent's numbers next week will be pretty good. JD.com has already shown they can do it. So people looking at those companies will say, well, there's no reason why they can't enjoy some of the benefits that are going on in the United States. And when you look at relative valuations, look at where we've come over the past 2 years, it really, there's a chance that there's some upside, even if the United States is still taking a hard line on China.
Mark, great to have you as always. Mark Cranfield, our MLI strategist, joining us out of Singapore. Let's bring in our next guest now, Andrew Tilton, chief economist at Goldman Sachs, chief Asia economist, I should say, and joining us here for the hour for the most part. Andrew, it's great to have you. I'll take maybe you pick, ever from Japan, China, the U.S. What really is top of mind for you this week?
Lots to talk about. You mentioned Japan already. I think the market's split between a March and April exit from negative rates. We're in the April camp. In the long term, it probably won't matter too much, and the discussion will move on to how high can rates go over the next couple of years. But in the short term, we think it's a bit more likely they wait till April. I think a couple of reasons mentioned in your earlier segment that the fiscal year end is coming up at the end of March. They also have an outlook report in April, which would give them an opportunity to explain the move in more detail.
Okay. It's interesting, right? Because what you're seeing in these wage talks seems to be quite strong so far, and maybe better than what we saw last year. Are you seeing signs of evidence of this virtuous cycle now, where you are seeing demand-led inflation really pick up?
It's quite striking. The wage ask from the Union Confederation is 5.9%, almost the highest in 3 decades. So even if that's not completely realized, we're likely to see a further acceleration of wage inflation among the unionized companies this year. And that should, as you said, get a more, in the Japanese case, virtuous cycle of wage and price inflation more sustained. I mean, that's really been the last missing piece for the BOJ, a sense that wage inflation is more sustainable and at a pace that can sustain service price inflation around the 2% target.
I mean, we were just talking about the sequence of events that could unfold, and whether it's going to be yield curve control first, then exit out of negative rates, or is it just going to be ripping the Band-Aid? I mean, what do you think is likely going to be the case?
Our take is ripping the Band-Aid, as you put it, in April with both. At this point, the yield curve control's not really very binding. They've moved to a soft target. The rates aren't exactly on that target at any rate. So in that sense, it's more of a formality, we think, moving out of yield curve control at this point. The focus will be on negative rates. How do they characterize that? How do they characterize where rates could potentially go? Governor Ueda has generally been fairly cautious and suggested there would be a slow rise in rates, if any, beyond the initial exit. So our expectation is we won't see much more of an increase this year, perhaps only one more increase late in the year.
And we can't call it tightening, can we? Is this more just a normalization of policy, or can we actually consider it? And will the market see it as it that way?
Technically, it's a tightening, but as you said, we'd probably characterize it more as a normalization from this extended period of extremely unusual, very loose monetary policy. So this is really a milestone, moving away from negative rates, Japan becoming more like a normal economy again with normal inflation, positive interest rates, modest growth, and obviously financial markets that are doing very, very well overall.
Is there a sense that you think when it comes to the economy, right, they talked about consumption being still weak. Do you think those real wages have still been on the decline? I mean, are we getting a sense that, these wage talks and the like and this virtuous cycle, could it actually lead to more consumer spending in this economy?
That's the hope. I mean, Japan's really quite different in this respect from most of the world. In most of the world, particularly most of the developed markets, we've seen inflation now come down faster than wage growth. So we're seeing positive real wage growth, and that's been supporting consumption in a lot of other markets. That's not the case in Japan, where wage growth hasn't picked up enough yet to surpass inflation, at least not meaningfully. This could change in 2024 if we see a further pickup in wage growth with inflation coming a tad lower. Then we could be getting real wage growth in Japan as well, and that would support consumption in a way that we haven't seen as much over the past couple of years.
All right, Andrew, Hang tight. More from Andrew Tilton there, chief economist, APAC economist, I should say, at Goldman Sachs. Just want to flag some lines I've been crossing through here. If you've been tracking what's been going on in Japan, not when it comes to negative rates and when they're going to exit out of it or lift off, but really another sort of lift off, which was Space One. This is a startup that was backed by Canon. So we're learning that that rocket launch failed and did explode in midair. So they did send that satellite to orbit today. They were seen as the first company from Japan to enter into this booming market for commercial rocket launches, but unfortunately not successful for this launch here. We have seen live pictures there from Kushimoto here this morning. We'll have plenty more coming up. This is Bloomberg.
My parents emigrated here from the Dominican Republic. My dad was a cook. My mother was a housekeeper. They barely had a bank account. The concept of a 401k was not